Hey guys, Kill here and welcome back to another Trading Edge video. If you guys are new to the platform, whether you're a trial member or a premium member, this is a video that Jason Greystone and myself put out twice a week. Jason usually on a Tuesday or a Wednesday, some type of midweek video. And I like to give you a weekend edition, so either a Friday, Saturday, or Sunday, depending on my schedule, giving you a look at some of the trading opportunities that are on my radar for the week ahead. And this video serves a few purposes. One, for you guys that are doing your top-down analysis, your overall market analysis over the weekend. It gives you something that's really like an extra set of eyes on the market. I know a lot of our more experienced traders, they do their analysis first. Then they come back and watch this video second to kind of see if what I'm seeing lines up with what they're seeing. And of course, the newer traders that are going through the course material right now that aren't necessarily trading yet, what they're doing is they're looking to practically apply the information that they learned throughout the course into the market. So when I'm going over stuff here where it's like, hey, we're seeing a 2618, maybe they just learned about it and they're saying, okay, here's how that concept can be used within the overall analysis that Akil is doing. Because again, we teach strategies. There are some very specific strategies that you can follow to a T, meaning like advanced pattern formations, for example, are a strategy that you can trade every single one. But when it comes down to more of the simple pattern formations, your double tops, double bottoms, can be 2618s, head and shoulders, wedges, anything like that. I like to fit them into an overall analysis, meaning I like to do my overall analysis of the market. And then I like to use them only when they fit within that analysis. So it gives you guys a chance to see how we actually can practically apply it instead of learning the information. Because I know a lot of traders, before you got here, you spend a lot of time on YouTube, you learn all these fancy things, but you don't actually know how to use them. I know for me, that was candlestick formations. I used to have index cards full of candlestick formations, and I treated it like a spelling test where I had them and I quizzed myself and I'd be like, oh, engulfing candle, 3 inside days, what does it mean? And then I would look to go to the market and only trade that specific candlestick formation without really analyzing or understanding that it's not the what but the where, meaning it's not the what I'm seeing on the chart, but the where it's happening at that matters most. So cool stuff. So let's get started today. A few pairs we want to take a look at. I think I got, let's see, Euro Yen, Aussie Dollar, Aussie Canada. There's one more, New Zealand, Canada to look at. So a shorter watch list this week. But let's get started with the Euro Yen. So Euro Yen, right? We have an advanced pattern formation here. We talked about this a few weeks ago, but because that's already in progress, right? Let's talk about what else is forming. We have some consolidation. We're consolidating really right between two levels of structure. Well, right above one right here. We haven't technically came down and touched it, but we're consolidating right at a previous structure high, and we're looking to put in what's called really a high and tight flag formation, which is essentially it's a sideways channel after an impulsive move, right? We have the impulsive move right here, and then we would normally expect some type of retracement like we've seen previously. However, we're continuing the shift sideways. And this tells me a lot about the buying pressure and the selling pressure in the market, right? You guys that went through the foundation course too, you kind of noticed, right? If we saw a massive amount of selling pressure, selling interest and selling pressure at this level, what would you expect to happen? Well, we'd probably start to see a retracement, right? If we saw a massive amount of buying pressure at this level, what we would do, we would continue going up higher. So the market's in a little bit of an indecision mode. This could be distribution setting up. This could be accumulation. We don't know. We are trading at previous structure resistance, looking left. But overall, based on this formation, I would have more of a bullish bias than a bearish one. Again, I would love it. This would be ideal for me if we had broken and closed above previous structure. Then we have that higher high, higher close that we can identify. We can predict the continuation higher. We don't necessarily have that, but I would be leaning towards bullish. So if I'm leaning towards a bullish move here, there's a few ways I can look to attack this, right? I can look to attack this either after the breakout, during the breakout, or prior to the breakout. And what I mean is this, right? If we're gonna assume that we're gonna break out of this pattern formation one way or the other, and you can kind of do the same thing for either direction. I'm just going to focus on the bullish side today. There's three ways you can look to get involved, right? You can look for the breakout, wait for the breakout to occur, either trade it after confirmation of the breakout or wait for the retest and the continuation, or you can try to trade it during the breakout, right? So wait for the market breaks out. As soon as it happens, boom, you're in on the ride, or wait for confirmation of the breakout, see if we can get a retest of structure, and then look to catch that next move. Another way you can get on board is setting yourself up prior to the breakout, right? So somewhere down at this bottom channel, you can see that's going to give you really the least amount of risk and the most amount of reward. However, you don't have confirmation that the breakout's occurring, so it's a little bit risky, right? There's always a give and a take. There's always a balance. You can't have or maybe very rarely can you have the best risk reward scenario with the most confirmation that the trade's going to work in your favor. Or the way around. You can have the most conservative entry, but be the most aggressive in taking trades. You kind of have to sacrifice something. So focusing on entering prior to the breakout. Let's head down to the lower time frame, the 4-hour chart. And you can see what we've had here. Again, this is basically a zoomed in look at our channel, right? Price action has bounced up and down. Go ahead and change this color to black, make it a little easier for you guys to see. Up and down, hitting resistance at the top, hitting support at the bottom, right? If you looked at this on one of our Ninja Trader charts, if you have the VS1 levels up, you should see a big green box at the top, or a big red box at the top, a big green box at the bottom. And on our last test right here, right, you can see that we had a little bit of a retracement. We came back down and then we rallied up, right? What is this called? What does this look like? I may have to zoom in one more. Let's go down to, I may have to go into an hourly to make it more clear, but what does this look like to you? Yep, the first move is a double bottom, right? Which would have been an entry technique or an entry reason in its own right. What would be the second one? Well, a more conservative way of approaching a double bottom, if you miss it or you just you want more confirmation, is looking for a 2618, right? So it's waiting for that double bottom to occur. It's waiting for price action to break the peak of that double bottom, and then it's coming back and retesting. So again, earlier I talked about practically applying these concepts. This is a great example, right? I don't trade the 2618 by itself. I know we have a few traders that do. I'm never one to judge how anyone trades, right? As long as it can be consistently, as long as it can be testable, verifiable, and repeatable, and as long as obviously it has a positive expectancy once you finish your back testing. Just not my personal preference for me. However, it is a technique that I can use to enter in trade. So what that means is I don't have to trade it every time, every single 2618 occurs in the market, but when a 2618 occurs in a situation that I want to get involved in anyway, it could be used as a way for me to get involved. And that's what I kind of mean by taking more of the simple patterns and putting them within your overall analysis. So what you'd be waiting for in the 2618 is a retest of this double bottom, whether you're using the 618 as an aggressive entry or whether you're creating a zone and then using a more specific entry within that zone. In the Foundation 2, we talk about all different types of entry techniques from very aggressive to very conservative. That is up to you and your personal preference. But the idea is that you're waiting for that retracement. You're getting stops below the double bottom, which is going to be below this range, right? And with your targets, right, if you're conservative, normally in the 2618, you shoot for a retest of the highs. But again, we're just using this as an entry technique into a bigger idea. So what you can look for is, one, a retest of previous structure highs. I think that's going to be your safest area. You can see a 2.2 to 1 risk reward. After that, then I would look for the extension. And again, the reason I wouldn't look for the extension first is because we technically, going back to the daily, we technically haven't violated structure yet. Again, if we look left, we're still at our previous structure highs. So technically speaking, per our rules of reading a trade, there's no reason to expect that the market is going to continue higher. Now, if we do continue higher, there's a few ways we can measure it. We can take the range of the channel, for example. Let's just see what this is. I'm going to do it really loosely because I'm not too worried about this yet. Range of the channel right there. We can take usually you can take a 1-to-1 measured move. That's not going to put us in a position that I think is going to be great. I'm a structure trader first and foremost, so I just don't like putting targets in random places. I like using structure. But perhaps we put a Fibonacci extension on here from our most recent swing low to swing high of this previous impulse move. And you can see we have a 127 lining up right with that level as well. So either that 127 extension about 122.60s or slightly below if you're a little bit more conservative at the 122 even handle lining up with this high right here are decent levels to look for targets. And again, how you want to play this is completely up to you. If you're someone that trades multiple positions, right, you can take one off here and take another one off here, or take another one off here. You can shoot for the whole thing up here and maybe manage to trade as it hits certain levels. That's kind of the uniqueness about being a trader. You have all of those options, and as your coaches, you know, we're the ones that you should be using to bounce those questions off of. I got one the other day, if you guys remember, in our Monday Q&A session about a trader looking about scaling in and out of position. So use us for that. By the way, I apologize for the deep voice. It is like 7 o'clock Saturday morning. I'm trying to get everything out the way quickly because I got no kids and no wife for the weekend, right? So of course that means wild parties, and by wild parties I mean I want to set up all of my content for the month, so getting lots of work done. So not fully awake yet, but hopefully you guys don't mind. All right, so if you're watching this on YouTube, this is going to be the only pair that we look at. I try to give you guys one on YouTube. For you guys that are premium members, or actually trial members as well on the site, we're going to continue on to our next one. And if you aren't a trial member, it's $1. Sign up. You get 14 days. There's no auto rebill after that. You just get canceled. You get shut off. But give it a try. I promise it's nice. There's actually a few of our members, if you can see on the chat, are talking to a trial member here. Just giving him some advice on how to acclimate himself to the platform and really kind of change the mindset about the reality of trading and having proper expectations. So that's pretty cool to pop in first thing and see that. All right, let's head to our next pair. Let's go to Aussie Dollar. Aussie Dollar, this is one that we talked about during the week. We're looking for a